Thank you everyone for joining us today to the Finance as a Service panel or Banking as a Service. We will explain shortly what it means. Today with us, Adam Cohen, GM Enterprise Unit at Payoneer, Roy Ben Daniel, Digital Partnerships and Venture at Visa, and Oded Zehavi, co-founder, CEO of Mesh. So we will start with a short explanation of banking as a service. I'll just say that we see it more and more. I saw it more and more during 2020. Short disclaimer, TLV partners, early stage fund, which I'm part of, just led the seed investment in a company called Unit, which is also in the banking as a service areas. Another disclaimer, Mesh, Oded is here with us, is another portfolio company of TLV Partners. Maybe Roy, please give us a short description of what is actually banking as a service and what are we seeing during these days.
Yeah, I mean, for people who don't know, banking as a service is basically it's a space where companies provide services for other companies to build financial services with. So I would divide it to two things. First, IT systems. So it's providing fintechs and banks and digital platforms with the technical connectivity that a company needs in order to build financial value props. And secondly, a big part of it is also regulation and compliance as a service. So if you're a fintech looking to provide banking services or money holding services in the US, it will take you a long time to obtain that regulation yes, and you can basically take that from other banks as a service. I would, just to close that, I would say that it's not a new space. It's a growing space and it's an evolving space, but it's been around for decades.
Sure. Yeah. I'll go. If anyone has anything to add to this, please. I just wanted to go back to the introductions and please tell us shortly what are you managing in your roles or what is the company you're part of is actually doing. Start with Roy again.
Sure. I work for Visa. I'm part of the European digital partnerships and venture investment team. And we basically make it easier for digital platforms and fintechs, neobanks to work with Visa. And it's good to be here. Thank you for the invite.
Thanks. Adam.
I'm the GM of Enterprise at Payoneer. Payoneer enables cross-border digital commerce. And the enterprise team looks after marketplaces and platforms. Payoneer is a two-sided network, so we serve both the marketplaces and the SMBs and micro businesses who participate in those marketplaces. They can be in services or e-commerce or vacation rental or any other vertical, and our team looks after the marketplace side.
Thanks. Oded?
So I'm Oded. I'm the co-founder and CEO of Mesh Payments. Mesh helps companies, mainly SMBs, to manage, control, and assure their SaaS subscription in corporate payments. And I'm really happy to be here.
Thank you, guys. So I wanted to start also after saying what is banking as a service, maybe just give us like a short, let's be a news desk for a second. What was the most fascinating, interesting news in the fintech area you saw in the past few weeks globally, in Israel or globally? Yeah, Oded.
There is every day something that looks like the most fascinating news. Like I tweeted almost 2 weeks ago that if an alien would have read my Twitter feed, he would have said that COVID-19 is over and Stripe Treasury have saved the world. There is a lot of hype around fintech and around banking as a service, which I think it's a good for the industry. There is a lot of investment coming in and enabling entrepreneurs that have great ideas how to make fintech accessible for more people and how to disrupt banking services as a whole. But from the other end, there is a lot of confusion. As I mentioned, Stripe Treasury, which is one of the leading of the banking as a service platforms, have officially launched more than a week ago, and it created a lot of buzz in the industry, both from the already existing banking as a service players, which have needed to like reposition themselves now when and gorilla like Stripe is coming into this space, and from the other side, from all the banks that have tried to avoid and thought it's a nuance and it's not really big business, and now when Stripe is around, it means that Stripe can eat any vertical in the fintech space that they like. It really emphasized the importance of that space, but from the other end, it's really emphasized the challenges, and we will probably speak about some of the opportunities and challenges that this industry brings.
Thank you, Oded. Oui, Adam.
Sure, I can go ahead. So Stripe's Treasury as a service is definitely a big one. We can talk about whether they can eat anything they want or whether there's some differentiated niches and use cases, but regardless, it's a really big thing. I think another thing which is has to do with payments, but may not be perceived this way, is actually Airbnb's IPO. Right, so obviously big news for the digital economy and for travel, but when you look really at what is it that marketplaces do, payments is such a big component of it, right? And financial services is going to play an increasing role in what marketplaces do, that Airbnb, again, as a champion in the digital space, is really very much about payments, and the fact that they IPO'd, still their price is still volatile, but overall a successful IPO, that's big news in payments.
Sure. Airbnb, we can say that is also is a customer of Payoneer, and you also.
Of course, yeah, I should have mentioned. So it's a strategic client for Payoneer, and we're really excited for them.
Thanks.
I'd like to add to that you know, if we look at what's happening, you know, basically two of these examples are one is example for the supplier side, which is Stripe, and the second is an example of the demand side, right? So it's interesting because, you know, I think unlike other fintech areas, this is rarely about creating new value props for consumers and merchants. And I'd love to hear other opinions about this, but I mean, my argument is that basically anything that you can do with these new platforms, you can do with the legacy systems. And actually, I think what I'm seeing, at least in payments, that many times the legacy systems sit at the back end of the finance as a service, banking as a service, new platform. So I think it's about democratization of being able to service or build banking services. It's about time to market, beating the competition to market, and it's really about capital efficiency, I think. But my biggest question, and this goes back to supply and demand, is how big is the market, basically. there's two major questions there. I think one interesting question is whether banks will move, right? Whether banks will abandon legacy systems and go to these new platforms. And this is a huge market opportunity, probably the biggest market opportunity for these platforms. And then connecting to Airbnb, how many non-banks are relevant for this? I mean, okay, everyone wants to add financial services and value-added services, but does it make sense for every digital platform to add such a service? There's a plethora of examples in this area. And on the supply side, behemoth like Stripe coming in, and with its massive scale and offering treasury services has a huge significance for Unit and other small startups that are currently just building their offering. So I think that's another thing to consider.
Yeah. So I wanted to take what you said first. Might be a question like, because the three of you mentioned Stripe. Is it going to be like a big winner here, or just as you said, there are more innovative companies coming in? And the second question, and sorry for putting two questions, what you said, what does it take from the banks? I mean, we see innovative companies coming in and they are working with, let's say, the old-fashioned financial institutions in the back end, but what it takes from the banks to work with those companies, and what should they do in order to play the game? Or maybe you continue.
I mean, when I look at the banks, I think I see two interesting phenomenon happening. First, some banks are actually making that their own service. So if you look at the US, there's a few examples of banks like Evolve, Cross River, Southern Bank that have I mentioned compliance before. They made it their main business to provide banking as a service. So they kind of they saw the fintech boom and they kind of pivoted their business. And in the US it made sense. In the US in 1990 there were 12,000 banks, and now there's 5,000 banks. Consolidation, ever-growing competition, the Great Recession, all that happened. I think that was really smart. And my question is, are we going to see that in other regions? So I see that dominating really in the US. I see that trend in the US. I'm not sure I'm seeing that in other regions. And then the second question is banks as clients. Again, I'm not an expert in this, but I'm sure that replacing a legacy system for a bank takes it's like a 5-year project, something like that. So it's huge cycle times for these companies.
Yes, Oded and Adam, you might also add to this, working as innovative companies, young startups with the banks, what it takes from the banks.
So one of the things that any fintech entrepreneur, or especially the one who didn't come from this space, should understand that in order to, and I'm trying to differentiate, because people sometimes confuse between fintech companies that just provide technology to banks and fintech companies which truly touches the money, like Payoneer and Mesh in a way, and then we need all the additional layers of compliance, regulatory, and one of the fundamental things we need a bank to support us. And for entrepreneurs that are not coming from this space, they need to understand that the first thing that any fintech startup needs to do is to convince to make the first sale to a bank, which means that it's a very tough sale. Usually takes a lot of months, and in the end of that sale, what's confusing is that in the end of that sale, you are allowed to pay banks a lot of fees in order to have a service. Okay, so it's a big win from one end, but it's usually a win that comes with a price.
That's very true. Yeah.
So that's a very important thing, and fintech entrepreneurs need to understand that. As my position towards the banks, so in my mind, banks are still confused, and Roy mentioned some of the banks that have been more active in that space. For most banks, and banking is a huge market, it's a huge business still around the world. There is more, most of the activities are PR driven and less about real activities. Still, most of the banks have huge challenges that are not related to any fintech competition or any other fintech. And I think that's one of the advantages of being a fintech still, that the banks will probably wake up one day when it will be too late. That's at least the wish. The same happens with PayPal many years ago, and it happens with many other companies today. So banks is something that will stay. They have a role in the ecosystem. People need to understand where they can be benefiting them and when they just making noise or creating more challenges than opportunity. And if they will do that, then they have a better chance to succeed. That's at least my position in that space.
Thank you very much.
I think I agree with both Roy and Oded. So banks have first a challenge of digitalizing their existing operations with their existing clients, right? Which is something that many of them do, and they have to if they want to compete with the likes of Revolut and others. But then there's also the angle of providing services. Banking services can be as a service or just banking services to the digital economy, right? Which is where we're seeing most of the growth. And this is where banks are really having a hard time, but we're seeing, for example, as Roy mentioned, some of them developing their own banking as a service services. For example, Green Dot working with Uber in the US. We're seeing Citi, Goldman Sachs, JP Morgan entering the digital economy and actually competing over the space of platforms. And then we're seeing a bunch of banks around the world and Payoneer partners with those banks to provide, to introduce services to, for example, IT companies or other outsourced companies around the world that needs a global banking services. And the local banks know that they have limited resource and limited ability to serve those needs, and they partner with someone like a Payoneer to offer them. And then there's also the vendor relationships that Oded mentioned. So benefiting from the growth of the digital economy by providing services to a fintech provider, and different banks will choose different strategies.
Okay, thank you.
Just to follow up on that,
Sure.
I think that, and again, it brings me back to a multiple conversation I made many years ago with the CEO of a company that Visa later acquired called Healthport. That was one of the first infrastructure players in our space. And he was always debating about the balance between should he be only an infrastructure player, which means that from one hand, he can get potentially bigger partners. But one of the challenges for a pure infrastructure only player is that all your clients usually will use you where they are small, and then when they will grow enough, they will try to override you because it doesn't make sense for them to, the unit economics doesn't work. And that's what I see across the board, and that's my feedback to some of these banking as a service players. In my mind, most of the successful players, and Stripe and Payoneer are great examples, have been evolving. They were a service. They brought their value to clients, to real clients, and provide services. And over time, they evolved into a platform. They didn't state we are a platform and they ask everybody to use their services. They've been helping and delighting clients, bringing a lot of value and evolving over time and exposing more and more services in a white label way to even banks in the end, which is like the holy grail of becoming a platform in the fintech space. But it should be not something that you should do for day one. It should be something that you should wait for until you are mature enough working with banks. It's from a sales cycle perspective and also from a deployment perspective, it's a totally different ballgame than servicing small and medium businesses. And you need to take this in consideration. So I'm seeing too many banking as a service players, which thinks that they should leapfrog these challenges and go directly and become or they are stating themselves as platforms even before they've serviced the first client and really understand what the value they can bring to these clients. In my mind, all of that is going to be matured, and to 2021 maybe will be a significant year for that, both on the maturing of these business services from one end and also on consolidation of some of the players that will need a scale in order to create a significant business in our space.
Thank you. I'll just want to take part of what you said and just to understand. So you're saying, is it from the product market fit perspective, or is it from the market education aspect? Like, is it they get to know me better, I have more product, I'm becoming slowly a platform? Or is it like the product market fit aspect of being a startup and finding your place and run fast?
It's everything, product market fit, especially when you are working in a space that is already saturated, a little bit extreme, but there are already mature players. Banking as a service started a long time ago by companies like Synapse, FI, and others that have defined or tried to define the playground for these types of companies, and many of the companies you've mentioned have followed. Even though it's not yet clear how much success, business-wise, I'm saying, to this generic vanilla banking as a service platform. Adam mentioned some of the partnerships in our space between banks and non-financial companies, which are potentially should have been the perfect clients for the platform themselves. So I think product market fit, it's less than an issue. It's more about do you provide a generic service, or you have a niche, or do you have a specific value that is beyond just gluing the different component of the ecosystem. I personally believe that the chances you will be able to plug and play a service in the fintech world is very rare. And as such, any even simple project or any simple partnership is becoming messy or becoming something that requires a lot of attention.
Yeah.
And the scalability is yet to be proven. So just to summarize, it's a complex space because there are a lot of regulatory and risk aspects to anything that you do in fintech, at least if you want to succeed. There are more questions than answers still. And that's why, just to repeat, I think that companies that have already shown value in specific niche, and they will be able to leverage that for partnership with non-fintech and with banks, in the end of the day will end as the winners of these types of verticals.
I'd like to add to that.
Sure.
I agree with what Oded says, and another thing that I'm saying is that going back to the IT and compliance parts, right? This is basically what the banking as a service means. IT is fairly easy to build today and much faster than the compliance bit. And their bottleneck in terms of global expansion is exactly that, is the local licenses in each country. And you know what, I'll add to that even the IT components, because because you can build your IT system, but then the banking services, the payment processing services, the alternative payment platforms, they tend to be local still. And by the way, this is why fintech is such a growing space and attractive still. So what I'm saying is that these platforms are, they might look global, but they are really still building their global footprint, country by country, region by region. Really, it's country by country. In region, it's maybe regional in Europe. So my point is that if you look at not the banks, if you look at the customers who are digital platforms, the Airbnbs of the world, they're global and they need a global service. That is the appeal of banking as a service to them. And I'm not sure that banking as a service can still offer what they're looking for.
I see.
So many times they need to go to multiple suppliers, and what they really want is a one-stop shop.
Yeah.
Yeah, so it also depends on the size of the company, I think. So if you are, as big as Airbnb, you probably have the ability to build some of the integrations on your own, and you will look for more specialized partners in some areas. And I think that Roy, the location or the geographical dimension that you mentioned is absolutely one of them. So some markets are really, really hard to pay to or collect payments from, or like just do anything. So Latin America comes to mind, India, some of the Southern Asian countries and others. SMEs would tend to look for a one-stop shop solution provider because they really want to focus on their business, and they don't want to build some of our clients have payments teams in the hundreds of people, right? So if you're an SME, you don't want to build such a team. So the orchestration aspect of it, which Oded mentioned, so the ability just to integrate a bunch of banks or a bunch of services, I think has a lot of value, even if it's only on the IT side for SMEs. But as you go to the giant platforms and giant companies, you need to be able to provide something very special.
Sure. Thank you. I'll take a step to the side and be like a socialist for a second. So we speak a lot about the very educated, big digitalized companies that are consuming these products. Are these kind of banking as a service or digital companies or new startups like Mesh, like Payoneer, also serve more traditional businesses? Is it something we are going to see in the future, that more traditional businesses or maybe also evolving areas and stuff will use it more and more, or is it still here to stay with the more educated, very tech companies going to be the main customer of this world?
Well, I think, and COVID have really contributed a lot to that. I think the gaps between the early adopters and the mainstream players have been decreasing dramatically. So if companies before have hesitant, and we work with the finance teams, so finance team usually were the slowest to adopt new technologies. COVID have changed all of that. And now even companies that traditionally was using anything other than digital have been forced, if they want to survive, to move to digital channels. And by doing that, they needed to evaluate also not only, and all these services are not provided to them by their legacy financial service providers, and they needed to go and look for new players, some of them bigger, some of them smaller, but you will find pockets of fintech related services now on almost any company around the world. Of course, it always, and for a early stage fintech startup, the question about the length of the sales cycle is very important. It's important always, but it's even more important when you have a timeline for your next funding round. So that's something you need to take very seriously. And as such, you will try to find as many low-hanging fruits or early adopters if you want to survive. But the early adopter, the adoption of fintech services, and of course, PayPal have really educated the market that there can be a fintech company that can be servicing even mainstream companies, and Payoneer has done a great job, and a few others. So I think that question will be less and less important going forward. But to your point, yes, there is still a gap, which is getting very, very small between the early adopters, which are mostly technology companies, and even old school mainstream companies that's only starting to adopt these types of services.
Thank you.
I think, by the way, you could think about some of the brick and mortar retailers that partnered with banks and card issuers as consumers of banking as a service services, right? So if food retailers or fuel retailers offer cards, loyalty programs, loans, these tend to be powered by somebody else, and that's essentially banking as a service, just old-fashioned.
Yeah.
Yeah, I mean, I'd like to add to that point that Adam mentioned. I really agree that if you look at, well, you know, banking as a service can be horizontal and can be vertical, right? It can be, here's a bunch of APIs and consume these, consume this access or consume these capabilities and build whatever you may want with it. Let's put Stripe in that bucket, and let's put Mesh in the second bucket, the vertical,
Yeah.
where a company builds everything from A to Z, including the user experience, including the backend, anything a company might need. You know, in my mind, you know, financial services, at least in developed markets, it's kind of a limited market, right? You know, I consume services from one bank. You know, there's a limit to how much banking services I as an individual can consume, as opposed to other services you can think about in the business world, like media or food or whatever, right? And that connects me to what Adam said, is that I think really the winners in this space, especially in COVID, where there's the acceleration of these services, is, you know, companies who will be able to build a custom-made A to Z and enable other companies to go fast to market. Again, Mesh is a great example for that.
Yeah. Thanks. So this will be, I think, the last question. Going forward, 5 years. I'll say it again. I think that in the recent 6 months, we see new funds only in Israel that are dedicated to the fintech market. So a short forecast of what are you expecting from this fintech world, and what is going to be the next big thing in the market? Of course, Payoneer and Mesh, but and Visa. But besides the three of you,
I can start with this one. You know,
we can. It should not be like a certain company, but rather a domain. So we speak a lot about banking as a service, but maybe a certain other domain that you see as a big potential or big.
Yeah, well, I have a call to action. You know what? I have a call to action to the audience, to any non-entrepreneurs that are listening to this. I think that there has never been a better time in starting a company. I think there's huge amount of capital still chasing a diminishing amount of entrepreneurs. We see a decreasing amount of new companies, especially in fintech. So, you know, personally, I think that the question, you know, a person should ask themselves is, where does the market value my capabilities, my asset, my knowledge better? Working for a big company or starting a company? And if you think you can be a good entrepreneur, I fully suggest that you look at fintech. It's a great area. Plenty of opportunities still that are, still in a lot of senses untouched, like B2B payments that we haven't talked about. Well, I mean, mesh is in that space, but so plenty of opportunities, and I invite anyone to reach out on LinkedIn and continue this discussion. And I urge people to start fintech companies. I think that's what the market needs.
Thanks.
So I think, well, I believe we are in a storm, and we are currently in the eye of the storm. And you know, when you are in the eye of the storms, everything looks very calm, and the sky is shining, and there is a lot of funding, and everybody is talking about you. But then usually the storm reaches you, and then things are becoming tougher. First of all, as a tip, maybe some contrary to Roy's introduction, is that my advice to entrepreneurs who wants to go to this space, that a key success factor to be successful now with the new fintech venture is the ability to raise significant amount of money, the ability to bootstrap or to start with $100,000 like any other free X80-200 guys who start something is totally different in the payment space. You won't be able to get attention of any bank to work with you if you don't have at least $1 million or $2 million in your bank. So if you don't believe you can do that based on a deck, don't even start. So that's one tip. The second one is that 5 years from now, I expect, following a lot of IPOs and SPACs and all these huge growth of the big players in our space, there are going to be a lot of consolidation and a lot of merger and acquisition. The big ones will try to leverage the more agile ones to go forward, and the agile ones will need significant amount of funding that will only be able to reach or to access through partnering with the big players. So still there is so many things to do. I'm still very optimistic about good companies in our space becoming great, but I think I advise people to really think twice about what they are doing and look for opportunities for partnerships and for raising more funds, as it's really key for their success.
Thank you, Oded.
Yeah, so maybe just a final one. I think you really need to think about digital, right? So what existing services could be optimized and could be potentially offered to new clients through digital? For example, can you make lending much more, can you make much better underwriting decisions? Can you provide loans at a better scale to more consumers and businesses that weren't really, that didn't have access to lending before? It can be in different markets, can be different segments. And the second one is really serving the needs of the digital economy. And really, I don't think that we can overstate how big it is. It's very obvious, but there's still a big difference between what purely digital SMEs and SMBs have access to compared to brick and mortar companies. So there's still a lot of potential in providing financial services to digital companies.
Yeah. Thank you, everyone. I will add to that we are, as Israeli early stage funding also, we work with Mesh, and we invested in Unit, and Next Insurance is a company of TLV partners. So we welcome also entrepreneurs in the fintech world come to pitch us as well. Thank you, everyone. It was super interesting.
Thank you, Eliran.
Bye.
Thanks, everyone.
Thank you.
Bye-bye.
Bye-bye.